On a quiet Friday night in February 2016, deep inside the Central Bank of Bangladesh, the world's eighth poorest nation, someone, or something, broke into the vault. But there were no masks, no guns, and no alarms. Instead, the robbers sat thousands of miles away, armed with nothing but keyboards and code. In a matter of hours, they would attempt to steal nearly $1 billion and vanish into the shadows of the global financial system. The Bangladesh Bank, located in the heart of Dhaka, is the nation's central financial institution. By 2016, it was handling billions in international reserves, a fortune by local standards. Yet behind its tall marble facade, the infrastructure told a different story. Old servers, outdated firewalls, and a network connected to the outside world through a cheap, $10 router. For years, auditors had warned that the bank's systems were dangerously underprotected. But nobody believed a cyber attack was possible, especially not one that could touch their foreign reserves in New York's Federal Reserve. And that's exactly what the hackers were counting on. In January 2016, while the bank's employees carried out their normal routines, a small, silent infiltration began. Hackers, believed to be part of a highly sophisticated group later linked to North Korea's Lazarus group, had found a way into the bank's internal network. They had been watching, mapping, and studying every corner of the system. Their first target, the SWIFT system, a global messaging network that connects over 11,000 financial institutions worldwide. If you control SWIFT, you control the money. But SWIFT isn't just open to anyone. To access it, the attackers had to breach layers of credentials and verification systems, while remaining invisible to security teams. Over weeks, the hackers inserted malware into the system, recording keystrokes, mirroring screens, and quietly learning how employees processed international transactions. Every movement, every password, every routine was logged. They knew who worked late. They knew when the system updated. And most importantly, they knew the exact moment the bank would be least protected, Friday night, Bangladesh time, when the weekend begins and systems shut down. February 4th, 2016. It's Friday night in Dhaka. The offices of the Bangladesh Bank are quiet. Most employees have gone home for the weekend. But in New York, it's still Thursday. The Federal Reserve Bank of New York is open. That's where the hackers strike. Using the credentials they had stolen, the attackers log into the bank's SWIFT system. From inside, they begin sending a flurry of authenticated messages to the Federal Reserve, requesting large transfers of money from Bangladesh's account. Each message looks legitimate. Each one is digitally signed with the bank's own credentials. They don't ask for small amounts. They go big, 35 separate transfer requests, totaling almost $1 billion. The funds are directed to accounts in Sri Lanka and the Philippines, countries with less stringent financial oversight. The destination accounts were created just weeks earlier, using fake names and shell companies. Everything had been planned. The Federal Reserve, as per normal procedure, begins to process the requests. Incredibly, most of the transactions are approved without question. Out of $951 million requested, $101 million actually leaves the account. The rest? Denied by chance. A single clerical error may have saved the remaining $850 million. One of the transfer requests mentioned a recipient company named Shalika Foundation, but the hackers misspelled it as Shalika Foundation. An employee at Deutsche Bank, acting as an intermediary, noticed the typo and flagged it for review. That single letter, an F instead of a P, triggered a red flag that stopped the rest of the billion-dollar theft. But by then, it was too late for the first $101 million. The stolen money was routed through the Federal Reserve to accounts at Rizal Commercial Banking Corporation, RCBC, in the Philippines. From there, it was laundered through a maze of casinos, shell companies, and foreign exchange centers. Within days, millions vanished into the country's gambling economy, where anti-money laundering laws were weak and cash moved freely. The hackers had chosen their escape route perfectly. Meanwhile, in Dhaka, employees arrived Monday morning to discover something strange. Their printers, which normally printed SWIFT confirmation slips, weren't working. They rebooted the system, only to find dozens of outgoing transactions they hadn't approved. When the staff finally saw what had happened, panic erupted. The money wasn't just missing. It had traveled halfway across the world. News of the heist broke on February 8, 2016, and spread like wildfire. For the first time, a sovereign nation's central bank had been robbed, not through armed men or vault explosions, but through a keyboard. The implications were staggering. If hackers could break into a central bank's SWIFT system, could they do the same to others? Could global financial trust itself be compromised? Governments, cybersecurity experts, and financial institutions worldwide scrambled to respond. The FBI, Interpol, and even the Philippine Senate launched investigations. And slowly, the pieces of the puzzle began to emerge. Cybersecurity firms such as FireEye and Symantec were called in to analyze the malware. Their findings were chilling. The code used in the Bangladesh bank heist shared distinct similarities with that used in the Sony Pictures hack of 2014, an attack widely attributed to North Korea's Lazarus group. The implication was clear. This wasn't a random cybercrime. It was state-sponsored theft, a government-backed operation to steal hard currency. Forensic experts discovered that the hackers had breached the system months earlier, patiently waiting and testing their tools. They had inserted malware specifically designed to delete transaction logs, cover their tracks, and prevent detection until the money was gone. The malware even tampered with printer functions to stop physical confirmations, buying the hackers more time. It was a masterpiece of planning, precision, and psychological manipulation. In the Philippines, investigators traced the stolen funds through RCBC bank accounts under fictitious names: Michael Cruz, Jesse Lagrosas, Enrico Vasquez, and Ramel de Guido. The money moved through a series of quick transfers, from RCBC to local currency exchanges, then into casinos and junket operators. Once there, the funds were converted to chips, gambled, and cashed out, erasing nearly every trace of the original money trail. One key figure, Maya Santos de Guido, a branch manager at RCBC, claimed she was following instructions from higher-ups. But no concrete link ever tied her directly to the hackers. The deeper investigators dug, the clearer it became. This was not the work of amateurs. It was a transnational operation, executed with military precision. By the time regulators froze the accounts, most of the money was gone. Only about $15 million was ever recovered. For Bangladesh, the heist was a national humiliation. The country's finance minister called it the biggest disgrace in the history of the central bank. Resignations followed. Officials were fired. Confidence in the system shattered. But beneath the politics and numbers, the story revealed something deeper: the fragility of trust in the digital age. A billion-dollar theft didn't require guns, vaults, or masks. It required knowledge, timing, and access. And it exploited the weakest link of all: human complacency. By late 2016, the trail led to North Korea. Analysts at the U.S. Department of Justice connected the attack to a man named Park Jin-hyuk, a North Korean programmer believed to be part of the Lazarus group. Park was later indicted in the United States for multiple cybercrimes, including the WannaCry ransomware attack and the Sony Pictures hack. The Lazarus group, experts believed, operated under the direction of the Reconnaissance General Bureau, North Korea's intelligence agency. Their mission: to steal foreign currency and destabilize global systems that opposed the regime. The Bangladesh bank heist was one of their most successful operations. In a world where wars are fought with weapons, this was a new kind of battlefield, one fought with algorithms, malware, and untraceable code. The heist became a wake-up call for the global banking system. SWIFT, the backbone of international finance, introduced major security overhauls, including two-factor authentication, stricter vetting of transactions, and advanced anomaly detection. Banks around the world rushed to review their cybersecurity infrastructure, realizing that even the most trusted institutions were vulnerable. And yet, for all the reforms, cyber heists didn't stop. In the years that followed, similar attacks hit banks in Vietnam, Chile, Ecuador, and Mexico, often using the same methods pioneered in the Bangladesh bank attack. The blueprint for cyber theft had been written, and it worked. Behind the scenes, digital warfare escalated. Governments invested billions into cyber defense, while criminal syndicates evolved their tools and tactics. From ransomware to crypto laundering, the line between state and criminal blurred. In the shadows, hackers became the new thieves, invisible, faceless, and global. For Bangladesh, recovery was slow. The central bank eventually strengthened its systems, implemented new firewalls, and upgraded security measures. But the scars ran deep. The $81 million that disappeared was just money. The real loss was trust, trust in the system, and trust in the idea that digital walls could protect a nation's wealth. Years later, parts of the stolen funds resurfaced. About $16 million was recovered from a casino junket operator and returned to Bangladesh in 2019. The rest remains missing, hidden in offshore accounts, cryptocurrency, or buried under layers of laundering. Despite multiple investigations, no one has ever been convicted for orchestrating the hack. The Lazarus Group continues to operate, linked to other massive heists, including cryptocurrency exchange breaches and ransomware campaigns. For many cybersecurity experts, the Bangladesh bank heist wasn't just a crime. It was a message that the digital vaults of the world are never truly locked. In the dead of night, while the world slept, a handful of hackers moved more money than most nations earn in a year. They left no fingerprints, no getaway cars, only lines of code and unanswered questions. The story of the Bangladesh bank cyber heist is more than a tale of stolen millions. It's a warning, a glimpse into the invisible wars waged every day behind glowing screens. When the vault is made of data and the thieves are lines of code, the next great bank robbery won't need a gun.